Hey there, savvy investors and curious minds. Today we're diving into the exciting world of index fund investing. Whether you're a seasoned pro or just dipping your toes into the investment pool, this guide will help you understand why index funds have become such a popular choice for investors worldwide. Let's kick things off with a simple question. What exactly is an index fund? Imagine you could buy a tiny slice of every company in a specific market all at once. That's essentially what an index fund does. It's a type of investment that tracks a market index, like the S&P 500 or the FTSE 100, giving you exposure to a broad range of companies with just one purchase. To put this into perspective, let's consider a real-life example. Say you want to invest in the US stock market. Instead of buying individual stocks in companies like Apple, Microsoft, Amazon, and hundreds of others, you could invest in an S&P 500 index fund. This single investment would give you ownership in all 500 companies that make up the index, from tech giants to healthcare leaders and everything in between. Now you might be wondering, why should I care about index funds? Great question. The beauty of index funds lies in their simplicity and effectiveness. Instead of trying to beat the market by picking individual stocks, index funds aim to match the market's performance. It's like surfing the wave of the entire market rather than trying to outswim it. One of the biggest advantages of index funds is their low cost. Because they're passively managed, meaning they don't require a team of analysts making constant buy and sell decisions, the fees are typically much lower than actively managed funds. For example, the Vanguard S&P 500 ETF has an expense ratio of just 0.03%. This means for every $10,000 invested, you'd only pay $3 in fees annually. Compare that to some actively managed funds that might charge 1% or more, and you can see why index funds are so attractive. But wait, there's more. Index funds also offer instant diversification. By investing in an index fund, you're spreading your money across hundreds or even thousands of companies. This helps reduce your risk because if one company performs poorly, it won't have a huge impact on your overall investment. Let's look at another real-world example. The Vanguard Total World Stock ETF, VT, tracks the performance of the FTSE Global All-Cap Index, which includes over 9,000 stocks from around the world. With a single investment, you can own a piece of companies from the United States, Japan, the United Kingdom, China, and many other countries. This global diversification can help protect your portfolio from regional economic downturns. Index funds have gained popularity among both individual investors and financial professionals. Even legendary investor Warren Buffett has recommended index funds for most investors. In fact, in his 2013 letter to Berkshire Hathaway shareholders, Buffett revealed that he had instructed the trustee of his estate to invest 90% of his wealth for his wife in a low-cost S&P 500 index fund after his death. So, whether you're saving for retirement, a down payment on a house, or just want to grow your wealth over time, index funds can be a smart choice. They offer a simple, low-cost way to invest in the stock market without needing to become an expert stock picker. And there you have it, folks, a simple bird's-eye look at index fund investing around the world. Whether you're in New York, London, Tokyo, or anywhere in between, index funds offer a straightforward path to building wealth over time. Remember, investing is a personal journey, and what works for one person might not work for another. Always do your own research and consider consulting with a financial advisor before making any investment decisions. If you found this video helpful, don't forget to smash that like button and hit subscribe for more investing tips and tricks. And hey, be sure to tap that notification bell so you never miss an upload. Drop a comment below to let me know what investment topic you'd like me to cover next. Until next time, happy investing.